How's it going, everyone? I had a few questions regarding my A+ setup using the 2022 mentorship model. And so I just wanted to give you guys a little checklist to go through before you enter a trade. This will help you enter higher quality trades, in my opinion. So let's get into a few examples. So the first thing we want to look for is some sort of liquidity grab. So if we look here, right, you can see we have these equal highs. Liquidity gets taken there, right? So then, now that that is checked off, we can go down to the lower time frames. For this one, I'll use the 1 minute. So you can see, never really took this high here. So just move that up. Right there, it takes the liquidity. We reverse and break this structure right here. And we get displacement, which is a break energetically below these lows, right? So then what you do is you want to have a fair value gap or order block above or below the 0.5 fib of the displacement range. So if you're shorting, you want to be in a premium, so above. So grab a fib, go from your high to your low, right there. And then where are your fair value gaps set up? So you have to be okay with it trading up into there. So with that entry, your entry would be right here, and you can do one of two things. Put your stop right there, or you can use the candle that made the fair value gap. But since it could trade up into here, I would just put it right above that fair value gap, or on this candle right there. It's kind of up to user discretion. And then if you look, what do we have right here? Equal lows, right? So that would be your first partial. Your second partial would be these lows down here, right? Targeting all the way into lows of the day. But when I say liquidity grab, it doesn't always mean you have to run the lows and highs. You can also go into a higher time frame imbalance. Right? So if you look, this is your 5 minute right here, and that would be your 15-minute fair value gap that is left. And so this is still grabbing liquidity, right? Just a higher time frame reasoning. So if you look right here, zoom in on the 5 minute here. To break structure, we'd have to go up to here unless we put in a short-term high, which we do right here, or this one. We break this, but there's no real fair value gap set up. So look to this one. We get our market structure shift right here. This is our displacement range. Mark it out with your fib, right, from the low to high. So now if you're wanting to long, you want to long at a discount, right? Well, is there any fair value gaps in discount here? Yeah, one right there that has not been mitigated right there. So that would be your entry. And risk to reward there, you have your first partial. I would take off around this little order block here, or these fair value gaps up here back when we get into a premium. So somewhere right in there, and then risking there. So that would be my first partial. When we hit this little order block, second partial would be this high here. And then third partial would be up there, or final position. So for this last example, I wanted to give a little bit of a smaller time frame example, right? So if you look, we have liquidity resting here and here, right? So if you mark those out, you can see we run liquidity, and this is before open, right? Before the news embargo lifts. And then we get this displacement breaking the highs all the way up here. So if you were looking to long something in here, I know the price action looks like crap, but what would you want to look for? Well, you got your market structure shift, right? On the 1 minute down here, 5 minute, they're all up here, right? Well, market structure shift, displacement over that market structure. So then what do you want to do? Draw out your fib. Make sure you're entering in a discount for longs. So you want to be entering somewhere in here. And so you want to look on the lower end. Is there any fair value gaps? Yes, there's one right here, right? That would be your entry, and you enter right there. You could put your stop right on the low of this candle, or if I were going, I would just use right there, lined up with that high. I don't like using stops all the way to the low, too much risk, but, and then your first partial, right here, second partial up here, which never hit. So you'd get out of that with about 6 risk to reward. Just to review everything we talked about for my A+ setup in the mentorship model is you want some sort of liquidity grab or a higher time frame reasoning to be taking a trade. You want a market structure shift with displacement, a fair value gap or order block setup above or below the 0.5 fib, depending on if you're shorting or longing. And then you want to return to that fair value gap or order block and then have solid risk to reward. I hope this video is beneficial. Tried to give a couple more examples for you guys. If you have any questions, please leave them in the comments below, and please consider subscribing. Thank you.